Hello there guys, and welcome to the scalper course. This is going to be a very good one for us impulsive guys. We are impatient and all that. We are looking for 15 pips, 20 pips, and we just want to close it and we want to see our results quickly. This is the one for you. Quickly, we need to explain the various types of traders we get out there. There are only two types of traders that we need to concern ourselves with when we are looking and learning the strategy. So, are you a reactive trader or a responsive trader? Let me give you a tip here. We want to be responsive traders more of the time. Now, what's the difference? A reactive trader is one who takes a trade at a level. He doesn't look at anything else. He doesn't need any further confirmation. All he sees is a level, whether it be a Fibonacci level or support or resistance level, or even if he sees just an indicator on a chart, moving average that crosses over, he sees something, it triggers in his mind that is an important level, and without any further confirmation, the guy just enters the trade. Now, there's nothing wrong with this, yeah? There's nothing wrong with that. Prices comes down, hits the support level, and then you go. But what we like doing is we like responding to this. So anything to the left here is the action. So you're always going to get your reactionary traders. You're always going to get traders who sees a level and immediately take action. You're going to get that. But what we want to do is we want to take advantage of this action. So we are going to respond to that action. So whatever we see, whatever price action we see as responsive traders, is we're going to use that as an advantage. So all this reaction, all this activity is going to be clues for us to take our trade. So we are going to respond to that trade or to this price action that precedes our entry. So it could be anything. Just remember that the level could be any sort of level. This is why learning Elliott wave or learning Wyckoff or learning how to trade Fibonacci, those are all good things, because then you would know where the levels are. If you are a moving average guy, your 100 moving average, your 200 moving average, anything that is deemed important by any trader, those are the levels that we are looking at. And we are then dependent on their action. Everything to the left here is their action. This is reactive traders. Then we come in with the last leg and respond to that activity in the market there. So it's going to be very simple. The course is not going to be that difficult. We're going to focus on what, where, when, how, and who. So we're going to start off with the what. So what is it exactly what we are looking for? When do we pull the trigger exactly? Now it's going to be as simple as 1, 2, 3. We're looking for a move in a buy situation. We're looking for a move up and then a retracement, and then we are looking for that move up, yeah, in our buy situation. And the other version is just ABC. It's exactly the same thing. So no matter where you learnt or whatever it is you've learnt, if it's a Fibonacci, look at this. Prices goes up, pulls back by 50%, and then you buy. It's the same thing. Everyone is looking for A, B, and C's, whether they know it or not. They are looking for break pullbacks. So in your buy situation, you're looking for break up and the pullback, and then your entry. And in the sell situation, you're looking for breaks down, pulls back, and entries. So everyone is looking for the same thing. Now, if you're not convinced yet, let me go even further. A head and shoulder. A head and shoulder pattern trader is looking for a 1, 2, 3. He's looking for an ABC. He's looking for a break and a pullback. Now, it depends on the reaction that happened before that. So prices comes down, goes up, comes down onto a level, then we are responding to that action. Prices goes up, prices comes down, and then we are entering with our right shoulder there. So if you are a head and shoulder type trader, you're looking for this sort of pattern, then this is exactly the same thing. You are looking for a break and a pullback. If we look at the other side here, this is your inverse head and shoulder, the one that goes long. Now you're looking at the traditional one, the one where you're looking at shorting. The left shoulder, prices goes up, comes down, goes up again, and then here's our pattern, our 1, 2, and 3 pattern. That's all we are ever looking for, and that is all any responsive trader is looking at as well. Because if you are a level trader, if you are a reactive trader, then you would be reacting off this level here, that support sort of level there, or you are reacting off the Fibonacci from there to there, and that's 50% or 68% or whatever it is. But in our case, or in the best scenario where we are responding to all of this action before, we are simply looking for a B and a C, or a break and a pullback, and then our entry. Just a quick example here, a Quasimodo. So what is a Quasimodo? A Quasimodo is prices coming down, it goes up in a trending fashion, yeah, like a normal ABC for Elliott wave, like a correction going down A, B, and then C. It's your A, B, C pattern correction. So what needs to happen, you need to take out, so this is a low here, and it's trying to make a lower low, and then this high is taken out. That's a Quasimodo. Now I just needed to show you this because I need you to study this pattern. This is what we are really after. We are looking for this reaction here, and then we're going to respond with this 1, 2, 3, with this ABC, which means the 1 and the 2 needs to take out this high. Just look at the other version here, the head and shoulders. Prices comes down and it goes up and it comes down. Yeah, here prices comes down, goes up and down, so we are equal. Everything is exactly the same. But look at the difference. The difference here between a head and shoulder and a Quasimodo is that leg 1 and 2 doesn't need to break this section here. It doesn't need to break the high, whereas in this case the high is broken. So this adds more weight to the entry. So when you see a 1, 2, 3, after it's broken this section here, then we are better off. Yeah, if we are risking, then I would risk more on the Quasimodo sort of 1, 2, 3 than the normal head and shoulder 1, 2, 3 pattern. Now, if you're not convinced still that all we are looking for is break pullbacks, A, B, C's, or 1, 2, and 3's, and let's have a look here at Mr. Elliott. Yeah, this is the guy who created the Elliott wave. All that he's looking for, he's got two simple things here: a motive wave, yeah, and a corrective wave. Now, a motive wave is something that has a motive, something that has some sort of movement, some sort of a reason. Like, what's it doing? What's its motive? Now, he says that a motive wave is, it starts off like at A, and it has its direction, B. It wants to get there. And how does he get there? That is the thing. If it's a motive wave, he gets there in a certain way. He gets there with an impulse move, or a leading diagonal, or ending diagonal. But the thing is that it ends up where he wants to go. It's like a trend. It starts off at A, and it goes to Z. You know, he has a direction. And then the other thing the market does, according to Elliott, is that it moves in a correction. Like, people are taking profits here, and it has a corrective wave, and that is the prices coming down here. Yeah, so the motive is that it wants to move somewhere, whether it's an up downward moving trend like this one, upward moving trend, its reason is it starts here and it has a goal in mind. Its goal is up here in the end, so that is a motive wave. Yeah, so we're not going to go into all of this things here, impulse, leading, diagonal. All we want to know is that when it's motive, it wants to go somewhere. Yeah, it has a long journey, it's trending somewhere. And then also it has a corrective pattern, people taking profits here and there. So no matter what sort of trader you are, just look at this. If you're going to look at our sort of response, prices goes up, comes down. That's your ABC. That's your 1, 2, 3. That's your break, pullback, again, break and a pullback, again, break and a pullback. The short pattern is break down and a pullback. It's all just the same thing if we are responsive traders. The only thing that matters is that what happens before the response. Yeah, what is it that happens before we start responding? Yeah. So in this case here, what was it before our pattern? So we know what we are looking for. It's just an ABC, but where it occurs is important. But in this section, it's just the what. What are we looking for? It's just a breakdown and a pull back. Yeah. And then what happened before that depends on whether we're going to take this break pullback or whether we're going to leave it in its entirety and we're not going to enter the trade. It all depends on this red section here. What has happened before that? But for now, all you need to know is what. What is it we are looking for? We are looking for a break and a pullback. So I'll see you in the next section where we are going to talk about where these patterns need to occur. So as long as you know that what you are looking for is simply just a break and a pullback, as simple as ABC and 1, 2, 3, then we can go over to the next section where we are going to talk about where we need to see the 1, 2, 3 or the ABC happen.